You know how sometimes the headline numbers from a company's earnings report tell one story, but the actual strategy, what's really playing out is, well, far more complex and frankly interesting. Well, grab your coffee or whatever you prefer, because today we're taking a deep dive into PDD Holdings Q2 2025 earnings. We'll explore the official release, look at their forward guidance, and really try to figure out what it all means for their future. Okay, so let's unpack these initial results first. PDD Holdings announced that its total revenues actually rose by 7% year over year, reaching RMB 103.98 billion. And a key part of that, their online marketing services, was up a pretty solid 13%. So, I mean, on the surface, that sounds like fairly healthy growth.
It does, yeah. But if you dig just a layer deeper, what's truly fascinating, I think, is the contrasting picture on the profitability side. So while that revenue grew, operating profit actually saw a really significant dip.
Hmm.
And it doesn't matter if you look at GAAP operating profit, the standard accounting way, or the non-GAAP figure, which is their adjusted number, both declined by 21% year over year.
21%, wow.
Yeah, GAAP profit came in at RMB 25.8 billion and non-GAAP at RMB 27.7 billion. Even the net income for ordinary shareholders decreased, down 4%. So yeah, clearly a tale of two different trends in those top-line numbers. Revenue up, profits down.
And what really stands out for me from those figures, maybe surprisingly, is that the non-GAAP operating margin fell so sharply. It went from 36% a year ago to just 27% this quarter. That's a huge compression, right?
It really is.
So for you, our listener, trying to track these market shifts, this big drop in profitability might seem like, well, like a stumble. But the company's own narrative suggests something else is going on entirely. What's the strategic thinking behind this? How are they actually framing this for investors?
Yeah, that's the key question. Is it a stumble? Or is it, a deliberate move? And if we connect this to the bigger picture, PDD Holdings is quite explicit. They state these financial results reflect strategic ecosystem investments. Management is, it seems, making a very conscious choice here. They're prioritizing long-term impact over those short-term results, building what they're calling a healthier and more sustainable platform ecosystem. So this isn't some accident. It's really a declared pivot in their strategy.
Right, so it's intentional. And this isn't just like a vague statement of intent, is it? There's that massive concrete initiative backing it up, the RMB 100 billion support program. Just to put that into perspective for everyone, that's roughly, what, 14 billion US dollars? It's huge.
Exactly. It's a very significant commitment.
And this program includes really tangible actions like a RMB 10 billion fee reduction for merchants on their platform and significant logistics initiatives too. It really feels like a huge commitment designed to cultivate that ecosystem they keep talking about.
Absolutely. And the company fully acknowledges the direct consequences of this strategy. They're quite open about it. They state that this sustained investment may continue to weigh on short-term profitability, and that profitability will inevitably fluctuate in the coming quarters. They're basically managing expectations.
So they're saying don't expect profits to bounce right back.
Pretty much. They actually said they don't believe this quarter's profit level is sustainable as a benchmark for the future. So their forward guidance is clearly setting expectations for continued heavy investment rather than any kind of immediate profit recovery. It signals this is really part of their long game play.
Okay, so these are definitely bold bets on the future, big investments. But are these investments translating into any real tangible benefits right now? Is there any early evidence this long-term strategy is already paying off, on the ground?
Yes, absolutely. Despite that short-term profit squeeze we talked about, these investments are already showing some real measurable benefits. Take the logistics support initiatives, for instance. They specifically drove a pretty remarkable 40% order growth in remote regions.
40%, that's significant.
It is. And this isn't just about, moving more boxes. It significantly enriches the daily lives of consumers there by increasing their access to goods. And importantly, it expands market reach for those small and medium-sized merchants, the SMEs, who might otherwise really struggle with delivery challenges in those areas. We're hearing many merchants, particularly SMEs, saved, and I quote, millions of RMB each year just from the service fee reductions.
Oh, millions each year.
Yeah, which is massive for them, right? It creates crucial room for them to innovate, maybe expand their offerings.
Those are really powerful, quantifiable impacts. But the sources also share some quite compelling anecdotes, don't they? Stories that really bring this to life, showing the human element of these ecosystem investments.
Indeed, they do. Take the Duo Premier Produce program. It's helping farmers earn higher margins. How? By improving quality control and getting their products to market more efficiently. We're talking about places like Jiaotong in Yunnan province. Local potatoes there, traditionally sold as just low-value raw produce,
Mm-hmm.
are now being transformed into popular flavored chips. And this has significantly increased income for something like 11,000 local farmers.
That's incredible. From potatoes to chips, impacting 11,000 people.
Exactly. Or think about the success they had with Maoming latanis. Over 50,000 kilograms were quickly sold after being featured in that RMB 10 billion program. These show really direct links between PDD's investments and, well, improved livelihoods.
That's a great example, yeah, connecting the dots from that big investment number to actual community impact. And it's not just agriculture, is it? It goes broader.
No, definitely not just agriculture. It extends beyond that.
Huh.
These initiatives are also supporting industrial belt manufacturers. Think regions like Yiwu and Foshan, known for manufacturing. They're helping these businesses move from what was often just commoditized competition, selling generic, undifferentiated products, towards developing their own branded offerings.
So helping them build brands.
Precisely. The platform's digital tools are helping them identify potential hit products and, crucially, reducing the cost of trial and error for new product development, which, as you know, is incredibly important for innovation and just staying competitive in today's market.
Okay, so these positive impacts are definitely visible on the ground. However, the report also highlights something else. This revenue growth, even at 7%, comes in the face of intensifying competition. WAF. Apparently, this competition has further moderated their growth this quarter. It really seems like the whole e-commerce landscape is shifting rapidly around them. How is PDD's management responding to this competitive pressure? And does it sort of reinforce their long-term investment strategy?
Yeah, this is a critical point. And interestingly, management seems to see this intense competition not necessarily as a threat to retreat from, but more as an opportunity to, quote, strengthen the high-quality development of the platform ecosystem.
So lean into it.
Exactly. Their response is basically to double down on their strategy. They've made this conscious choice, as we discussed, to increase investment and explicitly forego part of the profits. Why? To create growth opportunities, especially for those SME merchants. So this directly reinforces their forward guidance that profitability will fluctuate.
Makes sense.
They seem to believe this aggressive investment approach will pay off in the long run. The idea is to build a more resilient and attractive platform that outcompetes rivals not just on price, maybe, but on the strength of its entire ecosystem.
Okay, so this whole strategic investment playbook, it clearly extends beyond their core e-commerce platform. What does this mean for some of their other really significant ventures? I'm thinking about their ambitious global business expansion and also the huge Duo grocery operations. Are these also seeing continued heavy investment?
Oh, absolutely. Let's start with their global business. It's acknowledged, quite frankly, as being in early stages. They say there's plenty of room for improvement. So PDD Holdings plans to continue investing heavily. Things like supply chain, service, and importantly, compliance capabilities to strengthen its fundamentals.
Compliance is key internationally, right?
Definitely. What's crucial here is that they're explicitly adapting to complex business environments and also changing regulatory requirements in all these different international regions. They seem to understand that what works in one market won't just automatically work in another. It requires tailored investments to navigate, cultural nuances, logistics hurdles, diverse regulations. The vision, as they stated, is to bring more high-quality products to consumers worldwide, really building a global footprint from the ground up.
Okay, so a lot of investment going global. What about Duo Grocery back home?
Right, Duo Grocery. This is described pretty directly as a hard business requiring significant long-term investments. But it's one they seem deeply committed to. It already covers, get this, 70% of villages nationwide.
70% of villages? The scale is immense.
It really is. And think about what that means. This isn't just about deliveries in cities. It's addressing those critical last-mile delivery challenges in vast rural areas. It's boosting local products offerings, and it's directly impacting employment in these communities too. Beyond the business numbers, it's like creating crucial social infrastructure. And PDD explicitly states they will continue to increase our investments in this area, focusing intensely on things like product quality, supply chain efficiency, service standards, delivery speed. It highlights its foundational role in their domestic ecosystem.
It really sounds like they're building a whole new, very sophisticated infrastructure almost from the ground up for Duo Grocery.
Precisely. That seems to be the goal. And it's not just about merchants or logistics or these new ventures. They also continue to invest pretty heavily in consumer engagement. This includes robust give-back programs, like that RMB 10 billion coupon program we mentioned earlier. Apparently, that drove record sales across multiple categories during the big June 18 shopping festival. These initiatives are really critical for both sides of their ecosystem, right? Supply and demand, keeping consumers engaged and active on the platform, reinforcing the value proposition beyond just, say, low prices.
Right, keeping everyone involved. Now, to execute such an ambitious, pretty expensive long-term vision, a company obviously needs a significant financial war chest. And one figure that might catch your eye looking at the financials is the net cash generated from operations. It dropped significantly, didn't it, to RMB 21.6 billion from RMB 43.8 billion last year. That's a considerable decrease. It could seem concerning for their cash flow. Does this impact their ability to actually sustain all these investments?
Yeah, that's a perceptive observation, and it's definitely an important detail to put into context.
Yeah.
However, if we connect this again to the bigger picture, the company's cash equivalents, and short-term investments stood at a very robust RMB 387.1 billion as of June 30th, 2025.
Okay, so the overall cash pile is still huge.
Exactly. That number is actually up from RMB 331.6 billion at the end of 2024. So this raises that important question you asked. Do they have the financial resources to sustain these long-term profit-impacting investments? Well, the numbers suggest a very, very strong liquidity position. Despite that temporary dip in cash generated from operations in this specific quarter, which, as we've discussed, is directly linked to their heavy investments, they possess plenty of capital.
Got it. So they have the runway.
It certainly looks like it. It provides the necessary runway for this strategic pivot, ensuring they can continue to fuel this vision for, well, the foreseeable future.
So what we've really seen today with PDD Holdings is a company making a very deliberate choice. They seem to be sacrificing immediate short-term profits for what they clearly believe will be a stronger, more resilient, and ultimately more sustainable future. A future built on this robust ecosystem of merchants and consumers. It's a fascinating look behind the numbers, revealing a company that's genuinely playing the long game.
Exactly. I think that sums it up well. It's a clear commitment to, as they put it, long-term value creation over short-term financial performance. They're actively accepting these fluctuations in profitability as essentially a necessary cost, a cost of strengthening their competitive position and ensuring the overall health and hopefully dominance of their platform down the road. It's a strategy designed to deepen their moat in what is, let's face it, a fiercely competitive environment.
So as you, our listener, reflect on this deep dive today, maybe consider this. In today's incredibly competitive digital economy, is that short-term profit figure really the best indicator of a company's underlying health? Or perhaps is the willingness to invest deeply, even aggressively, in its core ecosystem, even at the expense of those immediate returns, the true mark of a potential long-term winner? Something interesting to chew on until next time.